Alright, so I'm here with my mom's friend Donna. Now, Donna, what do you actually do?
I'm a tax advisor. I prepare
Okay.
tax returns for mostly personal tax returns, some business.
Okay, so you're basically a tax accountant.
Correct, and I also do real estate. But
That's on the side, right?
yes, but it still involves numbers.
That's very true. Alright, so could you describe what maybe a typical workday would be like?
Well, I usually just work tax season, and I
Mm-hmm.
would come in the office and start working on anybody's return that I had sitting there, or possibly make appointments with people to prepare their return. And there's always plenty of IRS regulations to look at.
Yeah, so would you say that during tax season, like near mid-April, it starts to get much busier than other parts of the year?
There's actually two different peaks, sometimes three. This year we experienced peaks um, right in the beginning of February because
Mhm.
IRS wasn't really ready to accept returns. Then sometime in mid-March, and then again at the end of at the end in mid-April, like you said.
Ooh, so it's mostly towards the beginning of the year.
A lot of people, there's a big rush to come and get tax returns done as soon as they get W-2s, usually in January, like the second week of January. People are rushing to get in, but not as many people have them then.
Mhm.
So the biggest rush is usually the last weekend in January. This year it was February because the IRS wasn't ready to receive returns
Yeah.
till late.
Mhm. Okay, so what parts of your job do you find most challenging?
Interpreting complex tax laws that might deal with stock transactions.
Which is a lot of math, right?
Yes,
So-
because there's a lot involved in the stock.
Could you give me like an example of a type of math equation you'd have to do in your job on an everyday basis?
You have to add numbers together
But they're
every day. In order to give people proper estimates of the taxes that they owe, you have to be able to apply the percentages of the different tax credits or the different tax rates to the income they have. So they might be in a 10% tax bracket or a 15% tax bracket. A deduction, they may have to take 2% or 7.5% of their adjusted gross income
And-
off of their deduction. So you're using percents as well as additions and subtractions.
So it's a lot of statistics and adding and subtracting.
Yes, you could say
Yeah.
that. You could say that. That
Okay.
would be justifiable. And then there's always the comparisons when you're trying to compare one filing status to another filing status.
Which can get very confusing.
Yes, because then
Yeah.
you have to split all the income and the deductions that you're taking between the two people on the tax return to file jointly or to either file them separately.
And you were saying that there's tax brackets. How do you actually determine what people fall under which tax bracket?
Well, the tax brackets are based on your filing status.
Mm-hmm.
So you're either going to file a tax return as a single taxpayer or married filing jointly or married filing separately. Then there's two other exceptions. One's called head of household. If you have a qualifying dependent that lives in your home
Mm-hmm.
and you're not married or legally separated, you might be able to claim that. And the other is called a qualifying widower and married filing separately. So those filing statuses have different tax rates.
So for like a joint tax, that would be a couple per
Yes.
se. So would that be cheaper because they're a joint couple?
Well, it all depends on what kind of income they have going on and deductions. Generally, you receive more credits when you're married filing jointly. However, some of the thresholds for different deductions or different contributions to an IRA, you may be able to contribute up to $100,000 salary as a single taxpayer, but as married filing joint, if you weren't over 160, these are arbitrary numbers because I don't remember all the numbers. If you earned 160, you would not be able to contribute. So they don't let you double your income as married joint. They don't let you earn 200,000 before you can't contribute. They say 160, you can't contribute anymore. So it's hard to give people examples when they have a lot going on because there's a lot of different calculations you have to do to figure out what they'd be allowed. And if they're involved in pension plans at work, they can't necessarily contribute to an IRA account. If their income's too high, they can't contribute.
And what's an IRA account?
An IRA is an account people will establish to save money towards their retirement. it's a form of a pension account, so to speak.
So that's what you put your money in, so you can retire in the future.
Yes, so all you kids out there, if your employer offers a 401k contribution
Mm-hmm.
and they will contribute, please think about doing it because it's a way for you to save money. Just you need to check
A
about.
401k.
Usually when employers will offer a 401k, which is a pension type of pension plan, most of them don't offer the 401k Roth, but there's just a lot of different pensions. If you're a teacher, you'll be involved in the 403b or 401. There's different plans, annuities people can get involved in. That's all types of pensions. And you really have to think about where you're putting your money so that you can save for retirement.
Yeah.
There's also tricks to it too, because sometimes when you earn too much income and you contribute to a pension plan at your job, you can, so to speak, contribute to an IRA account that's non-deductible, a traditional non-deductible account. And then you can do one of these conversions to a Roth so that you can roll it in there and get the tax-free status on that Roth when you take the money out.
All right, I'm a little bit lost here, but
Well, pensions are important. That's the bottom line. You really need to invest in some type of pension.
So invest in a pension plan ahead of time.
When your employer offers it, or if you have to be working and earning income.
So
if you're
you need
working.
a degree, basically.
No,
Or
if
a
you
good
guys
job.
you have a summer job.
Well,
you
yeah,
earn,
but that's only a summer job.
but did you earn like $3,000, so to speak?
2,000 maybe.
So, well, because you're dependent on your parents' return, you can't contribute to an IRA. So there's some other rules too that I didn't touch on, because that's why when you sit down to do your taxes with somebody, it's good to have all your information and talk about what you plan to do in the future and your kids, and so that you can get a good idea of what deductions you can claim.
Yeah. So you had to take what's that test? The Certified Public Accountant, CPA?
Well, the IRS tried to make it mandatory for people to prepare tax returns that they were required to pass this test and have certain continuing education. It looks like they lost the case this year to have to do that, but generally, to prepare a tax return, you didn't have to have any credentials. You just could set up shop and prepare a tax return. CPAs usually have passed a exam that's 3, 4, 5 parts.
5 parts.
Yes, it was a 3-day exam. I just remember.
Is
I
it
didn't
all
pass
math,
that.
or is it mostly
No, business law, auditing, compilations,
which
all kinds
ties
of things.
into math, right?
Yes, a lot of math and a lot of theories and accounting principles.
Really?
Because there's so much more to accounting than just taxes. I mean, you could if you're a CEO, you're going to manage a whole business, so you're going to have to know.
Were you always a tax accountant?
No, I started off as a auditor. I worked first. I guess I really started off as a bookkeeper.
Was that right after college?
Actually, I started off as assistant bookkeeper at Morris Knowles.
And what do you do as an assistant bookkeeper?
I went in after school on the work study program that they had at Morris Knowles and worked at Birch Tire, and Pat taught me how to use the adding machine with one hand. And all I did was add up all the accounts receivable, accounts payable, make sure the bank recs were tied into the bank statement, and that's what started me. I
So
took an accounting
accounts
class.
receivable is the money that people owe you, and then accounts payable is the money that you owe them?
That the company owes
The company
owes
owes
for
the
the
person.
purchases.
Okay.
If they purchase their supplies, or they have
And you have
payroll.
to calculate the assets and liabilities, is that correct?
Well, yeah, so to speak, because what happens when you start a business is you're going to put some capital into it. So you're either going to put some cash into it, or you're going to put an asset. You're going to donate the building. You're going to set up a business, a limited liability, a partnership, S corp, whatever entity you want to create, and that business then is going to take in income from selling its services or products. And that's all going to be recorded as sales, and then you're going to have expenses. You'll have cost of goods sold against those. So, and that gets into all inventory.
Which is what a company sells?
Yes, that would get into an inventory. And some businesses don't have inventory of their services, so they don't have inventory. but all the expenses that you have to think about, like the person in charge, the CEO or the accounting chief,